the 6 viable KPIs of Elis, what's important and how to evaluate the success of Elis on all different aspects. More in this video. Hi, my name is Christian Wurzelball. I support the textile service industry with management training, know-how in textile service 4.0 and practical hints that you can implement right away. I've still to translate a few videos. On my German channel, I think I have 110 videos, and it's not so the case on the English channel. So there are more videos to come, so subscribe. I want to make a difference for the laundry industry. And especially in Europe, there is an interest in Elis. Elis is the market leader, and of course, on the one hand, it's interesting for everybody to know about Elis, and on the other hand, it's also interesting to apply some concepts. And I want to share one basic concept that I've learned from Malik Management in St. Gallen, and then I want to evaluate the performance of Elis according to this concept. And please make remarks, make comments in the comment section of YouTube. The algorithm likes it, and give it a like, and of course subscribe. Yeah, let's start. So basically there are 6 KPIs. The one is market position. It's basically on the one hand the market share and how successful you are in the market. So first you have to define the market, and then you have the market share, the absolute market share, the relative market share, and some other KPIs. And this is very important because on the one hand it's the sign for the success. Having a market share is a proof of success, and on the other hand, it's also it helps a lot with the cost structure. On the one hand, with the learning curve, and of course you have economies of scales, you have economies of density, and so on. So this is a big one. And then the innovation performance. So in every business you have your S curves, so the different innovations, and it's always important that you are up to the game, and that you are ahead of the competition, and also that you do not get substituted by a different technology, like, I don't know, Nokia, for instance, or some other companies that were big in at some time, but then got substituted, and now they're vanished. And this is also, therefore it's important to innovate and to replace yourself again and again in order to stay in business. Of course, textile rental is not so innovative like microelectronics, but still there are S curves, and you need to mind the development in technology. And then being attractive to the right people, HR, and of course that's important, and it's also a sign that the company is healthy, because if you get good people and if you keep them, then that's a sign that the company is healthy. And if there is some problem, then of course in the very beginning the good people leave, and then because they have a choice. Yeah, then operational excellence, Malik actually calls it productivity. I personally, I like more operational excellence, because it's also regarding quality and delivery time, throughput, and so on. So productivity is one part of operational excellence, and this is basically the KPI where you extract the juice out of the market share and so on. So that's where you transform the company into a business, and where you make money. And then cash flow and profitability, which is of course very important. And last but surely not least, liquidity. So these are the 6 KPIs. You cannot miss one. So if you want to have a viable business with just 5 of these, good luck. And I do not see a seventh one. So if you have a seventh one, then just make a comment to this video, or if it. So the market position of Elis. The market share, actually, especially in Europe and also in Latin America, is really, really good. So they have 25% market share in Europe, and they dominate also the market in Brazil and Chile, and yeah, they're starting now in Mexico. So they have in most places where they're number one, and in many cases by far. Yeah, the market share in the DACH region is good, but not as good as in other regions. So DACH region is Germany, Austria, and Switzerland. And in Germany, basically they are head-to-head with CTEX in healthcare, but they are probably not even amongst the first three in hospitality and in industrial garments. So Germany is not as good as the rest. And then they have also a small market, pest control. Sorry when I'm shitting about this issue, but I really, really don't know why they are buying pest control companies. I do not understand it. So if one of you can give me a hint, then please, please, please tell me. There are big companies like Rentokil who are huge and who are buying 200, 500, I don't know how many, but they are buying 10 times as much companies a year, and they are just huge. And Elis is a really, really small player. I would say like an ant. So in the pest control business, they are an ant, and that's not a good place to be. The question is whether they have all the customers on board for the long run. The observation that I have, at least in the German-speaking market, and in some cases also in France and other areas, that the customer satisfaction with Elis is average, and in some cases below average. So the performance in quality and also in the relationship with the customer is not really good. So the question is, when you have 3 billion in revenue, whether all the 3 billions are with you or whether they are just forced to be with you in the next few months or years, and then they are looking for, once they get a different alternative, they switch places. So the question really is, what is the quality of the market share that they have? And what I would question is whether Elis is one of the best companies regarding customer satisfaction. That's just my personal observation as an industry insider. And I do not see also many stats regarding customer churn rate or customer satisfaction. Measuring customer satisfaction is actually not really an indicator. The most important indicator is whether, on the one hand, you have how long do your customers stay with you? What's the churn rate on an annual basis? And on the other hand, whether you have organic growth that you can see. And I mentioned this in another video. You can see it on the channel. I do not see any organic growth, actually, or just really, really low organic growth. And therefore, I question the quality of the market share. Then the question is whether the market is bought with low prices, at least in part. There are some customers that stay with Elis just because they have no alternative at the same pricing. Yeah. And then the innovation performance of Elis. And I would say that the R&D is quite good. So they are doing a good job regarding the development of systems, of garment disposal, garment vending systems, logistics, They are setting up their own IT. They are investing in RFID technology and so on. So I would say the R&D, the development of new technology is not bad, at least on a corporate level. But and sorry, I really do not want to put a bad light on Elis, but I want to balance it a little bit. So on the one hand, there are good sides. On the other hand, there are also improvements. And one improvement, of course, is that they have too little focus in some markets. So when you have other textile service companies, even huge ones like Cintas, they focus on one specific niche. And of course, you are even better to make R&D and to develop the products and services when you focus on just one niche, as opposed to when you are serving hospitals and nursing homes and hospitality and all different industries, including clean room, garments, and so on. So when you and pest control, of course, then of course you lose the focus, and you start to be average in some industries. So I would say in some industries they are quite cutting edge regarding their technologies, but on the other hand, in some industries they are lagging behind to the specialists. And then, of course, this generates also quite some complexity in the company, and you see it in some plants that it's not so simple to work for different customer groups and so on. And then, actually, they have a slow post-merger integration. For instance, in the German-speaking plants, they have still quite a few old software or IT systems that they inherited from the companies they bought. And they are actually not as fast as you would expect in upgrading it and consolidating it into the software that they use on a corporate level. So basically, the integration, at least what I see in Germany, is not as fast as you would expect from a company that is specialized in M&A. So I think they are buying a little bit faster than they integrate. And of course, it's not just IT. It's also that you have to integrate all the marketing on which products you are selling to your customers and so on. So it's really, really a slow pace. And that's actually the point where organic growth, so real organic growth, is superior than M&A, because then you grow with your own systems, you grow with your own products. And when you build then a new plant, then it's your plant and your design and the layout that you normally would do. So basically, that's also the issue with innovation, that the post-merger integration is actually not. Maybe it's okay, but it's not benchmark. Then attractiveness to the right people. I would say the management is really professional. You can see it on the one hand how they handled COVID-19. I think they did a really, really good job in managing the pandemic challenges. And of course, they had also some issues, but in general, I would say Elis did a good job. And on the other hand, when you also talk with people who were acquired from Berentzen, then of course you have two sets of people. On the one hand, you have those who are pissed off and who left, but you have also many plant managers, sales managers who are actually glad that they are with Elis, because they have a quite professional management. So I would say that this is a good one. Of course, there is a but. and they have HR issues like everyone in the industry. And I would not say that they are better than the average laundry, maybe even worse. So they have their issues in getting good plant managers. They have their issues to having good team leaders and also employees on the shop floor. So there are issues and they are facing constraints there, and Elis is not immune to challenges in HR. So I would not say that they are better than the average laundry. At least they do not have any advantage. Yeah, operational excellence of Elis. They have quite a few modern plants, so they have invested, of course, in new equipment and new plants, especially when they acquired Berenson. Then they also made some investments, and I would say, and I would assume that this was also good investment. So, and of course, as a big laundry group, you have also the chance to implement group-wide concepts, and this is economies of scale and makes sense, and you get good deals from your suppliers so that you're able to afford more equipment. So I would say this is an advantage. Of course, there's a but, and the but is that I would say one part of operational excellence is also quality. And I would say from my experience that Elis is lacking in delivery quality and also in quality of some linen. So I would not say that they are trying to be the best regarding customer satisfaction. And that's maybe my personal my personal observation. So please take it with a grain of salt. If you have a different position, then it's okay. And I'm sure that there are many plants that are doing an excellent job, and they are superb, and that there are also very satisfied customers. But on average, I would say that they have some potential to get better in quality. They have, of course, a little of everything because of the M&A. In German, we would say they have a dog from every village. So when you buy a laundry, then of course you cannot replace everything. So you would live with the equipment that the laundry has invested for the next 10, 15 years, even longer in some cases. So and because the original revenue of Elis was €1 billion, and now they have 3 billion. So they added 200% in M&A, and these are plants that they have not built themselves. So they have different layouts, they have different machinery that they would not buy if they would do it from scratch. And of course, it's just all over the place. They have now 25% of the market share in Europe, and they have bought it. So it's basically everything that is in Europe is at Elis. And this is a constraint regarding operational excellence. And then the risk also that they postpone investments. Maybe I'm a little bit too critical to Elis there, but the point is that when you have a scale, and you have here the very top companies, and I have some in mind, who are really productive. I mean, incredible productive, incredible activity, and also incredible quality and energy savings and so on. And then you have the very bottom, so the that's the poor dog, and maybe when you look back, then you would have in America it would be National Linen. maybe it was something here was Berenson in UK, where they had the big issues with the equipment. And then you have the average laundry. And I would personally evaluate that Elis is something like here with the different plants. They have some quite above average plants, but they have quite a few average plants, and they have also subpar plants. And the point is, on the one hand, they have still some homework to do here. And on the other hand, if you do not invest all the time, then you decay of your plants, say every 3 to 5 years, you get one step down the road. So basically, if they do not really invest hard enough, then in 15 to 25 years, Elis turns international linen or Berenson UK. And I think this is a risk. I mean, I'm not. It's a risk, so it's not for sure. But that's a risk, especially when it comes back. When I come back then later regarding liquidity and so on. And I would not be surprised if they postpone investments, and you can postpone investments for a few years, but then it comes back to you. So that's the issue with operational excellence. I think it's good, it's okay, but it could be better. Profitability of Elis, yeah, of course, 12.5% EBIT margin is very good. But on the other hand, they have also quite a few debt to service, and they have also the shareholders to keep happy. So the EBIT margin is good, and I want to share with you a small analysis that I made. There is the revenue, it's split up by regions. That's the source is the annual report of this year, for last year. Then you have also the EBIT distribution to these regions, and then of course you have the the objectives of the CEO and so on. So you see that the CEO has the objective to increase the EBIT margin in UK, in Germany, and also to show the synergies from the Berenson acquisition, which is, I don't know, 5 years ago. So basically they have obviously an issue also with some profitability, and when you do the math, then it looks like this. So the overall revenue last year was, sorry, this is revenue. This is the German word. So that's sales revenue. And the revenue was 3 billion, and the EBIT margin on average was 12.5, which actually is good. So that's a check. And where does it come from? Of course, from France, 18.5%. I mean, that's incredible. Then the Berenson home turf. So that's the Berenson part that really worked. And then this is the Berenson. That was the reason why Berenson was bought by Elis. And this is still an issue, and they have not been able to improve it, actually. So UK and Ireland is still an issue. Okay, sorry, I have not translated it. So this is Scandinavia and Eastern Europe, UK and Ireland, and then you have South Europe. And South Europe is a COVID issue. Maybe if the sales, if there's a rebound in sales, then it's okay again. Then you have Latin America with 15%, which is a check with an asterisk. I have made a video about this, and I think I'll make again a video about South America. I think it's, on the one hand, it's good, but on the other hand, they have overpaid it a lot. And so 15% of something that you have bought at a too high price is still not a good business. Then Central Europe is 10.6% EBIT margin, and this, of course, please take this with a grain of salt, not just 1 grain, because these figures are. This is here all these figures here are 2021, and this figure here is the revenue of 2020 of Germany. So it's most probably a different revenue last year, but if you would subtract this revenue from Central Europe, then the rest of Central Europe, which also includes also Switzerland, is 344 million. And this is just an assumption, so please take this with a grain of salt. But I would assume that because some parts of this was also Berentzen success core, was a very. These are probably very good profit margins. So I would not be surprised if this is 15%, and this leaves then Germany with 7%. I don't know whether this is correct. I will sometime in the future try to get the P&Ls of Berentzen in Germany, but you see that also there is a reason why there is an MBO objective for the CEO of Elis regarding Germany, because obviously this has not improved so much. So basically, what you see is that Elis keeps to be successful in the business they originally had. So this is basically their origin story. This is the Berentzen origin, so basically this is also home turf, and this is overpaid, I would say. And the rest is basically not real good improvement. That's my personal opinion. And that's the profitability of Elis. So they are quite profitable in total. They have some issues in UK and Germany, and the big issue, and also where I have a different opinion than was presented in the last investor call, is regarding inflation. So I do not see the point that inflation has no real impact on Elis. I do not see the possibility to increase prices all over the board in the same way as the input costs increase. So I think that Elis will get some margin pressure here. So this is actually a big one. So I would say this is big one. That's maybe that's the biggest challenge right now for the industry, and of course Elis is part of the industry. So this is also most probably the biggest challenge for Elis. So input costs are rising. Your prices are more or less the same every month. Of course, you can negotiate with the customers, but then of course they are also negotiating, and some of the customers are switching and so on. And of course, they have still some currency risk in Latin America. It's not a big one, but it's still some risk in the future. Right now, it's even the other way around. The ECB has managed to make Europe like Latin America regarding the currency. So the euro is in free fall. So the Brazilian real in the last few weeks has a better performance than the euro. But I think in the long run, the euro will be stronger than the Latin American currencies. So there is always some depreciation of the assets and the profits that you get from Latin America. The liquidity of Elis, the next point. So the liquidity currently is actually quite good. They have 1 billion euros in revolving credit facility that they have not used yet. And in addition, they had 160 million in cash. So altogether, they're quite liquid. And then, of course, they're a corporation. They're on the stock exchange. They can issue bonds. So they have also access to capital and debt and everything you need. So and then, of course, but. Sorry, this is German. In German is but, aber. They have 1 billion or even a little bit more to refinance this year and next year. So basically they have to do it this year because otherwise they have an issue with the financial report. So they need to raise at least 1 billion euros this year. And this in an environment of rising interest rates. So when you look at the chart of the Elis bond, so that's the corporate bond that they have, and the maturity is 28, so it's 6 years to go. Yield is right now 4.1%, and it used to be 1.6% a few months ago. So basically, the coupon is 1.625. And when I recall it correctly, then we had a really drought of corporate debt issue in the last few weeks since the war in the Ukraine. And the first real debt issue was a British company that has a little bit lower rating than Elis, but still they are paying 8.5% on their debt. So probably these 4.1% is not the interest rate they will get when they refinance the billion euros. We will see. It's a very, very scary financial environment. You have the risk that we run into an issue like in 2008, when you have bond yields of 10%, 15%, and whatever. And this, of course, matters because Elis has a free cash flow of 200 million, and right now they would pay 2.5% more than they would have refinanced that they're paying right now. So it's already 25 million less. So they are losing about 12% of free cash flow right now when they refinance. And if the interest rates is even higher, then they could also halve their free cash flow. So that's basically quite some risk. I do not say that there is a risk of bankruptcy or something for Elis. So I think that they are quite safe, but there is a general refinancing risk. And this can have huge implications regarding investments, that what I mentioned before. So in this case, you have to decide whether you pay your shareholders some dividend or whether you buy some equipment that you need, or whether you buy also the linen that the customer urges you to buy. So when we come back to the evaluation of these 6 KPIs, it looks like this. So you have the market position. So the market position is on the one hand very good, but you have also the issue that some customers are probably not on board, and you need to improve also the customer base. You have the innovation performance, which is actually good, but still you need to better integrate your M&A targets. So there is some homework to do. Attractiveness to the right people is actually an issue, but this is not just an Elis issue, that's an issue of the whole industry. That's a bottleneck. So that's a big one. And then operational excellence is okay. I would say it's good average, but still there is a risk if you do not invest enough in the future. Then you can also have an issue in the next 5 to 10 years, not all of a sudden, but in the long run. Profitability is probably okay with some minor issues, and liquidity has actually, I would say, not a real liquidity risk, but you have a refinancing issue. So this is an issue, and if the rates increase, if the covenants are more strict, if there is an issue somewhere, then you invest less. So there is a negative impact on operational excellence, and this. And if you have then a quality issue, then it turns out not to be very good for the market position. You will not be able to make all the projects that you want to do. So basically, there are some risks with Elis, and my personal opinion is that there would be advised to consolidate a little bit more. I've made a critical video on the blog regarding the M&A activity of Elis, so you can see it on my channel. And yeah, so that's my evaluation. It's not investment advice, please. I'm neither short nor long with Elis. I actually do not have much stock at all. Right now I have different preferences regarding investment. So please take this whole video with a grain of salt. It's very much from a German perspective. Maybe it's completely false when you take the whole picture. Maybe Scandinavia and France is so much better then please excuse this video. But that's just my point of view, and if you have a different point of view, then share it in the comments, give a feedback, and if you like this video, then give it a like and subscribe to the channel. I think there will be at least 2 more videos in the next week regarding Elis. So stay tuned. Bye bye.